Well, the report came out Friday, and it was more supportive for corn, and then, of course, it went down, and then you had the tariffs over the weekend. But then corn bounced today. Beans and wheat tried, and, so the argument is over the yield now. There isn't hardly anybody that doesn't think it's 181.
Welcome to Hedge Heads, where hosts John Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I'm back in the office, gone 11 days, 12, 13, 4th of July. Yeah, almost 14 days. Now, I did come back. We recorded one episode on Monday, but otherwise, I've paid zero attention to the market. So you're going to fill me and your audience, our audience, in today.
You're in full summer mode. You've been rare around these offices.
It has been rare after a year. Wouldn't you say a year? I've been working overtime, though.
Yeah. It's a guy can't work all the time either. I've been trying to avoid here, but I've been here watching these markets. What do you even call this? You have tale of two markets. The cattle, enjoyable to watch if you're a cattle guy. Maybe not so much if you have margin calls, but that resumed its uptrend. Where corn and beans. Now the latest on Twitter I saw is the pollination issue. So if you can't get the hot and dry weather stir stuff up, you're gonna be with the pollination issues. Is it possible there was issues? Sure, but a few pictures on Twitter aren't going to do much good. But that's really the extent of what we have to deal with. Really poor markets at low prices, and now you're starting to really reach. And I don't even think they're arguing about could it be 181 anymore. The argument's how far above 181 it could be.
Yeah, you're not seeing anyone say under.
Yeah, the under guys have completely disappeared. Yeah. Totally.
Well, let's go. That fits in with it was a weekend of disappointments.
Yes, your race didn't happen because of the smoke.
Yes, thank you, Canada. Instant 200% tariffs is what I'm arguing for until they take care of their smoke.
Yeah.
We couldn't run a marathon because of smoke, and honestly, it was like a fog.
Yep, all that training.
So bad. 4 months of training.
Yep.
So I was looking forward to not running anymore. Well, I was going to go just short runs now for a couple months, but since we didn't run the race, we signed up for one October 4th. So now I got to do 2 more months of training.
Well, keep training. You have to run it
through the hottest month.
Yeah, you still have to. You have to do it, and it'll be cooler in October.
Maybe it will be super hot in August, and that will cause something for soybeans to jump.
Yeah, we haven't. They have the new hot and dry forecast out again, and that didn't fire up the markets. But the problem you've had with this forecast is we've had the hot and dry numerous times. Everybody seems really bent out of shape about the drought call in February, or you remember when everybody was putting out it was going to be a hot and dry summer. They kind of do that every year. I don't know why everybody's bent out of shape that it didn't happen this year. What makes this year unusual for the marketer, the hedger, is that you fear that 2014 type of year. This one was even worse than that because we fell in February, a month that's not known for that. We were at a price that would have been good for people, 480 in the new crop, 489 I think a few guys got. And then we fell in February. So that was the main problem. Now, that was bad enough. But then we came into summer or spring, and the planting started going good. Then we had the crop report, that showed that the planting, we have all these acres here, and the weather continues to be good. So it was that 2014 type year that I fear that it just doesn't give you an opportunity to market. Now where do you go with your marketings? And that's the important part. So what we do here is we're talking to guys every day. Sure, you can log into some online thing, Robinhood or something, and just buy or sell wheat, buy or sell corn or beans. But what we do here is we're going to get ideas in front of you. So every day we're talking to guys, and the more ideas in these types of market that you can find, the better off you're going to be. Well, not necessarily, but you want to
At
have,
least the more options you have.
yes, you're going to want to continually have ideas thrown at you, and that's where we're very different. We are not trying to compete. We do have an online platform, and you definitely can enter your own orders on your phone or your web. But being on your own in these markets is going to be a little bit tougher because the ideas are harder to come by. So that's where we come in. We're gonna be looking for ideas and things the guy can look at, such as I'm already tracking December 26th corn. If we're gonna have a big carryover, we might get our high sooner rather than later. Actually, this time of year is generally when you see the high for the next crop year. Unfortunately, we're not very high. Then we're going to start dealing with carries, when to roll contracts, picking the time periods, and starting to plan already for 2026, even into 27. I know that sounds silly, but that's what you have to do if you're going to stay ahead of the ball. Other guys are going to be focusing on old crop. It's that old cycle where I don't have enough marketed. Now I'm going to put it in the bin, and they're worried only about old crop. You're going to have to worry about old crop and new crop when you start getting big carryovers like this. You're going to want to know when to use the carry to your advantage. Are you storing it? Are you selling the carry and then storing it? Are you going to sell options against it? Is it a good idea to sell options against it? Right now, with the implied volatility, I mean, what's your thought on selling options, puts or calls?
I have zero interest in selling any option at the now. I'm also not a producer, so I think there's opportunity if you're not looking to hold it forever. If you're looking just to add a few cents,
Yep.
I think there's definitely options out there, but man, you're not making much.
No, I mean, what was it? 480s for 3.5 cents for December. That's an awful lot of time. You have frost. You have a lot of different things that could happen. So can you use that to your advantage the other way? If they're so cheap, what can I do with that?
Yeah.
Well, if you want to sell rallies, let's say you thought this is the bottom of corn. This is just an example. You would maybe buy one of these cheap calls, look for a rally, like let's just say 15 cents. At that point, short futures, and now you have basically a covered short position. So in this instance, you're using the very cheap calls to eventually establish a short position if you're bearish. You wouldn't want to buy calls and then put a whole bunch in storage and say this is the bottom, because all you do is own more corn of something.
Double up your...
Yeah. So what you want, if you think that you're just going to rally, which we would normally rally this time of year after a big sell-off, and then it's another short unless there's some good news. In other words, we usually make the low in August or September. That's more common than July. So you would kind of be planning for, hey, do I look at calls so I can establish a short with confidence? So if you're only paying 3.5 cents, we rally 15 cents, then that gap, well, I probably wouldn't choose a 480, but I choose something closer to the money, and then you can get that short on, and then you have that call already established after a 15-cent rally. You're close to that gap, and that risk goes way down. So that's if you're bearish this market. You also could just short futures and buy a call, and that's, a synthetic put. But at these levels, and that's the problem, is that there's not a lot of meat on the bone left here. It's very difficult. You can get chopped to death. So you're still looking for ideas every day, and things change. You might not have an idea, or you might not have anything going on, and 3 days from now, we're sending out emails or text to guys, hey, this is what we're looking at. And you want to keep, just like I always say this, like your old high school football coach used to say, like, keep those legs moving, which always annoyed me because I felt like I was moving my legs, but I probably wasn't.
No, I guarantee
they just keep yelling at you anyway. I think even if you were, they still, but I probably wasn't. And you just have to keep on going, because this is the market that you have, and the guys that do well seem to find stuff in the markets that help them with their hedges. You want to find helpful stuff, and you always want to be looking forward and being positive. You can go on Twitter, and you're going to find endless people that a lot of people actually follow for some reason. I have no idea. And it seems like they only complain. They just complain. Like, I don't know that they trade. Maybe they do. Maybe they don't. They might not be in the hedge. They might hedge a lot, but they're constantly complaining about the low price, constantly. And there's a lot of negativity. I would not get caught up in that. That's not going to help you at all. And you just want to focus on, is there things I should be looking at? Again, December 26th corn. I'm also looking at November 26th beans. So if there's a lot of corn, big carryover, and a smaller acreage in beans, maybe we got a trip up in beans, but then November 26th, you're going to want to look for spots marketing there because there's going to be a lot of beans next year. You're always looking forward and looking to what you can do to help yourself. It gets to be a tougher time of year this time of year when the market's down at already very low prices. You own the commodity. So if you think it's a bottom, you don't want to just go buy more. You don't want to just go out there and double up in your crop. So it gets to be a tough time of year for strategies at these prices. One would expect a bounce here. And then at that point, there's more strategies, and that's what I'm talking about. Plan on if there's a bounce, here's what I'm doing. And it can be in your regular marketing. It doesn't have to be here. It can be, I'm going to sell at this price level if I get a bounce into July, or, if you get a little hot and dry weather in August, maybe beans can go up $1 really quick. You want to start planning for this stuff. One guy I talked to today, he sold some old crop corn, and in his region, they're paying 65 cents over. That's Ohio. And he was trying to decide whether he wanted to just lock in basis and then see what the futures are going to do. So there's a lot of decisions still that impact you this time of year. My point is, don't go to online and complain about how corn inflation adjusted is the wrong price. That's just not going to help you at all in your marketing. Is it fair? No, not really. Or the funds are driving it down. If you get caught up in that negativity, what you're going to do is get bitter and hang on to it probably for too long because it's worth way more than I would rather plan out, this is what we're going to be looking at if we get this rally. This is what we're going to do if we come up again in October and September like last year, and start thinking about the markets that way. Those guys tend to do a lot better than the guys that get really angry because it's below the cost of production. And what are you going to do about it?
Right. Well, and the one guy we both know who does very well, I would say he will even tell us he does better on paper than he does on his farm.
Yeah.
It stick and move. There's opportunities. No matter what the price is, there's something you can do to add to that line.
Yeah.
And that's what's out there. And it's not the same thing for every farm. That's where it's tricky. Now, when you talk about a bunch of ideas, a big part of that for us is we are talking to people all the time. I just had a call while we're recording this from another guy in Ohio, right?
Illinois. He was, I think.
So there's, we're hearing all over the country and hearing different ideas, hearing different bases.
Yep.
And those things weigh into options, what you want, what you could do. And what's right in Ohio or Illinois is not going to be right in North Dakota.
Yep.
But we hear those and then we can discuss them and we can share those ideas with you. And that's why we're doing the podcast, right? Is so that we can share some of these ideas, not recommendations.
Yep.
Just ideas. Like you mentioned the beans and looking at 26. I'm very closely monitoring. I'm not taking a position in it, but the July-November 26 or 25-26 spread.
26-20, July 26, November 26.
November 26 spread, closely monitoring it.
Yeah.
There could be some good opportunities.
Yeah, sometimes that'll get to like -10 this time of year in what they think is a bearish year. It's at, I think, +13.
Yeah.
But if beans get tight, that's where it would show up. If there's good demand, that's where it would show up. The meal spreads are way down there. And then we had the $4 March puts that we talked a lot about. Guys that did do them were taking profits last week. Some guys still have stuff on. But, they're not going to be home runs. They're going to be singles and doubles in this market.
That's the part you need to be aware of. We're not looking to make 30 cents.
No.
We're looking to add 5 cents to the bottom line. If you do 3 different moves throughout the year that add 5 cents each,
yeah,
that does a ton to your bottom line.
Yeah, that's what I'm talking about. The guys that keep their legs moving, they're not doing stuff to do stuff. There's a fine line there. They're doing stuff that makes sense. Let's say you had an order, even though this doesn't currently work. I'm going to put an order into the elevator to get rid of my corn if it hits 470. Why not sell a 470 call instead? If that order doesn't get hit, you get to keep that premium. If the order does get hit, you can sell your physical bushels and you can get rid of the call. Sure, the call might have a loss on it, might not have much of a loss, depending on how much time is burned off. But you get paid if it doesn't get up there. If you just have an order at the elevator and it doesn't get up there, you don't get paid anything. So you're always looking for something, although I would not recommend that right now just because the premiums are so low. Oftentimes that's the case. Guys, sit on it. You're sitting on corn. It's a covered call. You own the asset that you're selling the call on, so you're not going to lose money. If corn goes higher in the bin, you're making money. The call you sold for 15 cents, let's just say, is maybe worth 23 cents. So we've rallied 35 cents, 40 cents. You're going to lose maybe 8 cents on the call, maybe. And that's with a very good market. But you get to sell your corn a lot higher. But now if it doesn't ever get up there, say it gets up to $4.50, you still get that 8 cents or you get that 15 cents in your pocket, if it doesn't make it up there by that time. So you're always looking to try to generate income on your bushels when it makes sense. And again, I'm the first to say it doesn't make sense after beating it up for 65 cents straight and now selling a call that's seriously underpriced is probably one of the worst things that you could do. And also when you sell a call, another thing is, let's just say things start to change. You sold it for, let's just do 20 cents. You had some time there and it's time's burned off. It hasn't gone up a lot, but now things are changing. Reports are changing and you have a 10-cent gain. You might not get that whole 20 cents. You might only get the 10 cents and then you get out. So you're not locked into that for that entire time period. You're just trying to bleed premium out. Unfortunately, we don't have a lot of that right now. July's had offered some opportunities this summer. July 26 corn calls, I think you could get 520s for 30 cents. They're probably drained down to, if you look right now, I think at least 20 cents of premiums drained out of there already. So you sold that July 26 time period, but you drained 20 cents out of it, and now you can get out with a 20-cent profit on that if you had done that. And a couple guys did do that. So that's why I kind of bring it up. So there's always...
Did you say 520s?
520s, 530s.
They're at 11 cents.
Yeah.
I mean, that almost makes me want to...
And then bring up a chart and see where that was, before. Even this is after it fell in February. You still, there was at one point, I think you could get 30 cents or 29 cents, somewhere in there. So now it's drained down, and that would be a 19-cent profit, and you can get out, and you have no exposure to the upside. So you hear guys selling calls, and then they got caught with that call, and it went way in the money. You can get out of a call anytime you sell it. And this is on bushels that you are storing and that you're sitting on anyway. You're going to want to try to generate some revenue. Even though that opportunity isn't here right now, in 5 days it could be. We could have a 35, 40 cent rally where it makes a lot of sense to look at selling calls. So it changes fast. What's not there today could easily be there tomorrow. And so that's what you want to do, is mentally get ready for, if this is going to go this way, this is what I think I want to do. And then we would help you with that framework. And then when it gets there, you kind of execute the plan, or you don't you call, go over stuff again and see if you want to do it. Now, things have changed. Like last year, they started dropping the ending stocks, and I had some call shortages like that. We got out for break even. I think it were $5 July calls. And we got out for break even. So things did change last year, even though in the end you could have held those short calls and been totally fine, because July was nowhere near $5 when that expired this year. But you're not stuck in this stuff. You want to actively manage it. You don't want to be getting in and out on every little tiny move, but you also want to try to generate income on your bushels that you're storing in a covered way, if that makes sense.
100%. I'm looking at March now because you got me interested. Because, like I said, I've been gone for a week and a half.
Yeah, these premiums don't make a lot of sense. But if you can start getting like $5 for 12 cents, like right now, what is a $5 March call?
$5 March is only 6 cents.
Yeah, so it doesn't make.
You're not going to sell that. That's for sure.
Yeah, you're not gonna sell that at all. So you want to look
real quick. You wouldn't sell that one. 6 cents. It's not going to bleed. at best, you're maybe going to be able to make 3 cents. Let's say the price doesn't change. It'd have to go down considerably.
Yes.
In the next 5 months to really bleed 3 cents.
And it makes no sense to expose yourself to that kind of risk. As a matter of fact, a lot of these guys that had shorted calls this summer, we're starting to move out of them because now it becomes a lot more risk for reward. You've got some money made in them. Like you say, it takes time to bleed that premium out of there. So you're sitting there waiting for something to change and you can hardly make any money. Terrible position to be in. So I like to manage my short calls. Other guys like to ride them to zero. I feel like I like to take it off the table early just to avoid all the rest of that time. Like you're saying, you have all that time. Let's say you had sold them earlier and you sold them for 25, 26 cents. You have 6 cents left you can get, but look at all the time in between now and February and what could happen with South America or anything else. And it makes no sense for me to sit in that thing. So when you sell a call, don't assume you're going to get all the premium. Be real flexible. And again, these are on covered bushels that you're storing anyway. This is not on extra stuff where I'm going to short 40 and try to make my numbers work on 10,000 bushels of corn. That's what gets you into trouble when you really overhedge, because what if you get that surprise? Well, if you're not covered with your bushels on the way up, it's going to hurt a lot on the short calls. And you don't want to get yourself into that situation. And you also don't want to get into a situation where you're just doing stuff because you're bored. And the market's fallen a lot. And
That's
now
my favorite way to trade, though.
Now it's fallen a lot, and it looks like it could go either direction. It's a market that maybe you should watch for a couple of days. It actually looks a little bottomy here. You don't want to say it's the bottom, but we had a nice little reversal. We had nice numbers on Friday. Part of the problem with corn is nobody believes the numbers. I mean, nobody thinks that we're at 1.73 or whatever they said on Friday. Every report, it shrinks. The world stocks for exportable corn is shrinking. We have a large Brazil crop. We're going to have a large crop. So if you make and you see some of this on Twitter, they're making the charts without the U.S. and then it looks like it's the lowest in 30 years for exportable corn. But we're going to have a big crop and we're going to have a lot. So what kind of market are we in then? Market that you're going to look to do stuff on rallies, whether it's marketing fully or whether it's like I say, buying calls and then shorting it. You want to look at what you're planning on doing with your old crop, and then you want to start planning for new crop December 26th already and have some goals in mind for that. We haven't seen enough. Generally, this is a really good time of year for that, but it isn't this year because everything just fell completely apart. That was never very high priced. It's not like it's got 45 cents a carry here and you could take advantage of that. The only thing we have is carry into July on old crop, and it's just not even an attractive level in July right now. And we're getting to a time of year where you can find a bottom. So we had a constructive looking day today. Corn had more tariff news over the weekend, and kind of surprising actually. I thought Canada and Mexico were taken care of, but apparently they're not. But the market doesn't believe it, and that's a good sign that we're getting to a point where he's saying tariff and the market's not really believing it. I don't think that's going to hurt you. I think that's going to help you because we've seen some wild swings. It was a good excuse to sell it off when they said tariff. They tried that Sunday night and it didn't work. So eventually you cry wolf one too many times, or you see that like the Russian-Ukrainian war. They would bomb the port. We'd be near limit up or 40 cents up overnight in wheat. Then about 3 months down the way when they just didn't care anymore. That's what's going to happen with these tariffs. Now, if we were to go to permanent tariffs, like he's saying 30% for Canada and Mexico, obviously that would be a big deal for corn. Japan's also there. Everybody's assuming that things will change. And I mean, what's your opinion? And I think that the market's seen enough of this to assume that we're not going to have these huge tariffs on farm goods.
I would think that we've learned by now that no matter what's said, we should wait and see what actually happens.
Yeah.
Because that's entirely the negotiating tactic that's used. And
Yep.
just say the same thing over and over. Oh, take it back. Nope, back on. No, we take it back. Oh, now we're negotiating. Nope, they're back on and they're double.
Yeah.
To react to that the first time it's said, I mean, I know the market's going to do it, but it does seem a little excessive.
Yeah, and that's really given you between the perfect weather, or arguable very perfect weather. Not everybody, of course, has that, and then having the tariff, the funds have just had this open season on just shorting this stuff. They've taken advantage of it. They haven't believed the numbers that they've been putting out in the USDA, which is a really foreign concept. How many times have they really understated the corn crop that you can remember? I can't remember any time.
0.
Yeah, so this is a really different market. If we were actually trading the numbers, 1.76, we'd already bottomed a long time ago, because ending stocks drop every report. The problem we're seeing is nothing in the cash market indicates that this is true. So it's a really foreign feeling in this market that you have these great numbers and it shouldn't be going down. And that's where I think some of the bitterness comes on Twitter. Why is it going down with these numbers? Because you're told to follow the numbers. I don't think that the guys shorting the market, the funds, believe the numbers. And so far they've been right. The basis has not been able to say, there was 9 deliveries in July corn. Look at the corn futures price and there was 9 more deliveries. And this is old crop that we had record export demand on. The numbers appear wrong, and that's where I'm at on it, that they've understated this crop, even though every report we see less and less corn. And if we were under 181, we're going to be at 1.3, 1.2 really quick. So why are they shorting the market? That's what they don't believe the numbers. And really the argument is, what's the yield going to be now on corn? How much over 181 is it going to be in corn?
Right.
And then another argument they like to have on Twitter online is, what is the market trading? Like one guy will say they're trading 188, 189, 187. I don't think they think of it in those terms really at all. I think that's kind of silly. I think that they are trading the numbers they're putting out, but for what I just said, in between the tariffs and the good weather, you really had to just open season on just being short this market, and it's going to overdo it to the downside as it always does.
And it's worked for them for months.
Yeah, it's worked for them for months.
Yeah,
and it's been pretty relentless. I've been part of it. I've been on the wrong side of it on the way down. And they're right now until you can get cash markets and basis to improve. And that's really all I think you need to watch for a genuine bottom. I think when you see like that stuff improve, that you will find a bottom, and it'll probably be very powerful when that happens. That happened in 19 when they said we had all this corn around. Then they said in 2020 we had 3 billion bushels, carried over. And that was the August report. They had that. But the basis was good for a full 2 years before that, abnormally good. And there was signs that there wasn't what they said. And everybody knew there was all those pre-rent plant in 2019. So instead of arguing with the market, look for the signs that it is tightening. And then you're going to have a real solid bottom on this demand, because low prices will bring in good demand. And we've definitely seen that in corn, wheat, and beans right now.
Yeah. I what's interesting to me, and we can talk about this a little bit more, but we can go back, I believe, like last August and September episodes, if you want to go back and listen to those. We talked about the USDA numbers, and you're saying, everyone hates them, or it seems to be that no one wants to listen to the USDA numbers. But you have to trade them as long as they're the numbers and the market works. But there are points where they don't seem right. So how do you look at that now when it appears they're not accurate?
It's been tough. In 2019, a lot of people are very bitter about that, and for good reason. That was the crop that was stolen. Those numbers were never right. In 19, and people were long corn. I remember this perfect, and they were going to hold until it went up, and nobody did. They saw that 3 billion bushel carryover, and that number was so far off, it was incredible. We ended up with almost under 1 billion bushels by springtime.
Yeah,
you can't be off by 2 billion bushels. That's not possible. And this one's weird is that it's trading like they're understating the crop, and we've never really had that I can remember. And if we have had that, they fixed it by January or March, and then they kind of start finding bushels. This one they never did. Every report's a little bit better than the next one. And it's like, well, it makes it really confusing for a guy. If the numbers say I should hold and store it, and which is exactly what it says, then I should hold and store it. If I was a producer right now, that's what I would do. And most guys do plan on sitting on it, is that that hopefully the numbers are right, or at least they will be right soon. Even with 181, we only have 1.7. You should get a much better price than this. But like you say, to your point, it's very difficult when you can't trust the numbers. This one's so odd because, like I say, they're throwing everybody a bone, but it's not working. As a matter of fact, it's having the opposite effect.
Right. Well, and on top of that, it's super expensive to sit on stuff now.
Yeah.
So you're stealing it the other way now. And how many people can actually afford to sit on it?
Yeah, and I think that the commercials know that. Everybody knows that it's going to be easier out of everybody's hands. And sitting on it into July has been a complete disaster for years. Sitting on it till March has worked. Sitting on it till February worked last year for sure.
But the commercials don't want to sit on it either with interest rates where they're at. It ends up being theirs too.
Yeah, so your argument would be it's more of a hand-to-mouth, market where all of a sudden it could turn really bullish. I mean, there's people throwing that out there. When it turns, it's really going to turn. I still think you only need to watch spreads and basis, and that's going to tell you when that's happening. You don't want to anticipate it, get long a whole bunch, saying it's going to happen like 2020.
Right.
When these markets have bottomed, you've seen pretty aggressive buying by the funds at the bottom. Maybe try to jump on the coattails of these guys. That worked in 2020 at the bottom in August. It worked last year at the bottom in September. I think it was September. It might have bottomed in August.
Yeah, late September, early August.
Yeah,
it turned around.
Look for the volumes. Look for the smart guys and what they're doing, and try to adapt your strategies to them. That's worked. This year was tough. You had the tariff stuff that set it off in February. Was it just a sell-off that they were going to buy? No one knew. It was the top. I mean, it came in hard, fast, and completely out of the blue. Back to the numbers. I don't think the numbers are right, and I think the funds did realize that with the cash market. The spreads were pretty terrible the whole year, and they never got better into this day. We still have deliveries in July. So, to me, you got to go with the basis and the cash markets, and that's what's going to guide you through what I think are really tough numbers to navigate, because the market's saying to hold the numbers they have out right now are saying hold all of your corn, you're going to get paid a lot more than this, or at least more than this.
Yeah, no, I agree. Well, John, I got to tell you, it's Monday afternoon, but my phone's blowing up, so I think we can wrap
back to work
here. But
yeah, no problem. We didn't cover a lot of the markets that we'd normally cover. We just kind of went. We wanted to keep it positive. Like, do not fall into that trap that it's going to be a lot of financial pressure and it's going to be low prices. But things change, and just look or learn about how to look for the opportunities that can help you market going into next year, and try to do better than those guys complaining.
Absolutely. All right. Thanks, Jen.
Sure.